Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 6:30 in New York. It is Thursday, 24th day of September 2020, and this is the Daily Report for Gold and Silver. We did see a modest recovery in both precious metals, gold and silver, trading higher on the day. However, it is the intraday low on both that interests me the most. While one day does not signal a recovery would have its first day looking something like this. In other words, a lower low than the previous day and a finish that shows a recovery or solid gains on the day. We certainly can say that we came close to seeing that today. We'll have to see how tomorrow's trading unfolds before we can really signal that we've seen a V recovery, but we'll talk about that during our technical studies. First, to the price board. Today, gold and silver traders witnessed a modest recovery in both precious metals. Platinum also traded higher, with palladium being the only futures metal that traded lower on the day. But what is most noteworthy about price changes today are the intraday lows of gold and silver, and we'll cover them when we look at some charts in just a bit. To gold, basis December 2020 contract, currently fixed at $1,871.90. That is a net gain on the day of approximately $3.50. Silver had a decent gain on the day, gaining about 12 cents, closing at $23.22. But it's the lows, as I said, that are most interesting, $21.81 in the case of silver, and in the case of gold, we saw the market trade to a low of $18.51. Now, the dollar index had very little influence on the precious metals today. I'm going to mark this in the unchanged column, although it has had tremendous gains on the week. We have also seen silver and gold have tremendous losses on the week. In terms of the ETFs, silver gained approximately 1.84%. That's 39 cents per share. Gold had modest gains today of about 0.4%, a gain of 65 cents a share. And lastly, Nugget had a nice gain, gaining $4.20 per share. That's a 5% gain and is currently fixed at $82.55 per share. Traders, let's take a look at some charts. Traders, the key takeaway to today's price action in both gold and silver has absolutely been the intraday low that was achieved in both precious metals. You'll see that they're very similar, although they kind of work themselves out differently. What we are seeing is that the lows that came in both gold and silver corresponded very roughly to the 100-day moving average. We are looking at a daily chart of December gold. You can see the intraday low comes in above both the 38.2% retracement as well as the key 100-day moving average. 1846.80 and 1844.90 are the collective fixed price of the 100-day moving average and the 38.2% retracement. Traders were able to take gold lower. The intraday low today was lower than yesterday, so it is the lowest intraday low we have seen during this brief correction. And the fact that we moved and closed in positive territory is significant, but it is the intraday low to me that is most significant. Simply put, when the price point came down to these levels, market participants perceived pricing as oversold and bid prices off of those lows to bring the market back up. And the same can be said when we look at a daily chart of silver. This is the December futures contract, and it is the 100-day moving average that very, very closely aligns to the intraday low. You can see that the candlestick itself formed is very, very hammer-esque. And the reason I say esque rather than a hammer is that it does have a small upper wick. And typically on a hammer, you want to see the close and the high be the same. And that gives it a flat top in terms of the actual formation itself of this candlestick. It also is an incomplete piercing line. If it had closed at the close, it would be an on-neck pattern. If it closes above the close, there is no exact candlestick pattern for it, because the definition of a piercing line is that it needs to close at or above the midpoint of the prior candle. And you can see that it's quite short of that midpoint. Nonetheless, what fascinates me the most is that both gold and silver traded to the 100-day moving average before moving up and above that. Without a question of a doubt, unless we have a spectacular day in trading tomorrow, we will see both gold and silver close lower on the week. And as I said in our opening letter, although one day does not mark a recovery, a V recovery would look something like this. Of course, it would need to be followed by tomorrow's trading activity, and that trading activity that we would look for would be a candlestick that had a higher high and a higher low than yesterday's candle, meaning that it would be a green candle, and that would really indicate that we had the potential to say that we are seeing that V recovery. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.